Hi, I'm Sam Slater from FundCalibre, and today I've been joined by Devan Kaloo, manager of the ASI Latin American Equity Fund. Hi, Devan.
Hi there.
Most of your portfolio is invested in Brazil and Mexico. Why is there that concentration in these two countries?
Well, I think it's a function of the fact that the biggest universe or pool of companies is in these two countries. So if you look at the index as an example of the availability of companies to invest in, Brazil is around 60-70% overall of the index, and then Mexico is around 20-25%. So just those two countries alone, we're talking about over 85% of the index. And if you include in Chile, which is the next largest, we're talking around 90-odd% of the index. So that represents the universe. And therefore, as a consequence, for us, that's where we go fishing for ideas. And that's why they're predominantly featured in the portfolio.
What individual opportunities have you found in some of those smaller countries like Chile, Peru, Argentina, and Colombia? Some of the managers that we've spoken to recently, like the banks in some of those countries, would you agree with that?
Well, there are lots of opportunities, and it's a good that you asked the question, because in the smaller markets, there are typically opportunities which are under-researched and therefore potentially interesting for stock pickers like ourselves. So I would say that we found opportunities actually outside of the banking sector. And just to give you an extreme, if I can, of the type of opportunities you can find in, say, Argentina, one of the companies we invest in is a company called Globant. Globant is a company that helps other companies transform digitally. And it does this primarily around the media and the creative sectors of industry, but along its client base includes companies like Disney, LinkedIn, and even Electronic Arts. So you find in some of these small markets some really interesting companies like that. At the other extreme, you have a company like GeoPark in Colombia. GeoPark is one of the few privately owned oil companies in the region and indeed across emerging markets. And there they have a tremendous asset base, very flexible workforce, which has meant that they've been able to respond quite quickly in response to the pandemic. And as a result, very geared into potential oil price recovery and able to potentially consolidate within the sector as well. So those are the sort of things that we're finding. Now, that said, there are opportunities in the banking sector. But the one thing I would just caution on the banking sector, both in Latin America and wider, is that there's an awful lot of government involvement now. And that is likely to increase, not decrease, and therefore the projected returns for these businesses may be less than the historic returns of these businesses, and that's something that we need to be cognizant of.
And do you expect the upcoming election in the US to have any impact on the short-term outlook for Latin America? Maybe Mexico, for example. Do you think the wall could be a thing of the past if Trump doesn't get re-elected?
I think on balance, a Biden victory would be better for Latin America than a continuation of Trump. That said, many of the issues that came up in the first presidential election or the first victory for Trump have largely been put to bed, in particular the US-Mexico dispute around the takeover of NAFTA or the change in NAFTA. But Biden, I think, would be more supportive of regional policy, and therefore I can see that probably as a more positive backdrop for Latin America.
And what's your longer-term outlook?
Well, actually, the longer-term outlook for Latin America, I think, has improved despite the concerns about the handling of the pandemic and indeed the oil price. And there are a number of reasons for that. One, I think overall, I think we need to start thinking about inflation again. When you think about how much debt has been increased with the response to the pandemic globally, particularly in developed countries, you've got governments that would welcome higher inflation to help them deal with that debt burden. And that means that interest rates are going to remain lower. But you've also got monetary policy, which is supporting fiscal policy, which is different from the global financial crisis when that didn't happen last time around, which potentially is inflationary. And of course, you've got the other big thing, which is de-globalization. And that's where rising protectionism, the US-China dispute, is leading to changes in supply chains. And as a result, that's potentially inflationary. So if there is a resurgence of inflation, then actually Latin America was a good place to invest in, because given their commodity bent in many places, they should be beneficial of that. So that's one reason. The second reason I would say that you would want to potentially think about Latin America is that the pandemic has accelerated existing trends. So the take-up of the internet, online education, online consumption has certainly gathered pace as a consequence, and therefore there's some new interesting business models to invest in. But in addition to that, it's also accelerated some of the ESG take-up, and that's been a big benefit to many companies within the region. And as a result, I think there's one last point that we should probably think about, and that is that on the back of this deglobalization, I expect that there will be increased regionalization of supply chains. So you'll probably find that companies move out of China and into places like Mexico, supplying into the US. So Mexico could be one of the prime beneficiaries of the US-China dispute. So I think there's lots of reasons why potentially, from a big picture, you would want to potentially think about Latin America. But from a bottom-up perspective, there's also some great companies to invest in.
You mentioned there ESG. I wouldn't naturally think about Latin America as being a place to invest in ESG. Could you expand on that a little bit more, please?
Yeah, so there's a few trends here. First of all, investors investing into Latin America, both international and domestic, are increasingly thinking about ESG as a theme or as a way to invest. And as a result, you're seeing companies with better governance, better social, better environmental standards doing better. Now, oddly enough, you can actually find a number of those companies in Latin America. In fact, probably on proportion, more so than in Asia. The second thing is that as the government pushes rebuild in terms of infrastructure programs and the like, I suspect many of these infrastructure programs will be more green in their nature. And therefore, there are beneficiaries of that within Latin America. And then the third point is that as companies increasingly try to attract capital in, because they're going to be needing that capital, because at the end of the day, Latin America is an importer of capital rather than an exporter of capital, they're going to have to look to become more attractive. And one of the ways to become more attractive is adopting more ESG type behaviors so that you become more interesting for a wider pool of investors. So I think, yeah, there's lots of really interesting ESG stuff going on in Latin America.
That's brilliant. Thank you very much.
Thank you.
If you'd like to find out more about the ASI Latin American Equity Fund, please go to FundCalibre.com.